Assalamu alaikum and hello everyone. Today we are starting a new topic, the statement of cash flows. And in this series, we will cover cash flows from operating, financing, and investing activities, the direct and indirect methods for calculating cash flows from operating activities, then a complete cash flow statement, and then we will learn how to calculate free cash flows and much more. So these topics will be covered around 7 to 8 lectures to give us plenty of time to go into detail. For today's lecture, we are just covering the introduction to the cash flow statements and its overall format. So let's get started. The main purpose of statement of cash flows is to provide information about the cash receipts and the cash payments of a business entity during the accounting period. So it helps investors with questions about the companies like ability to generate positive cash flows, so investor can see how well the company brings in cash from its core operation, which is essential for sustaining and growing the business. The next one is the ability to meet its obligations and to pay dividends. So this shows whether the company has enough cash to pay its bills, loans, and other expenses. Then the need for external financing. This means that this statement helps investor to determine if the company will need more funding or if it can finance itself from its own cash. The next is investing and financing transactions for the period. So the statements also reveals whether the company has enough cash to invest in products or in new opportunities like buying equipment or expanding operations and so on. So by examining these points, investor can make better informed decision about the company's financial health and potential for growth. So this is the format of cash flow statement, and you can see that all cash flows are divided into three activities: cash flow from operating activities, investing activities, and financing activities. By adding cash flows from these three activities, we get net increase or decrease in the cash, and then we add this in the opening balance of the current period to get the net balance, which is the ending balance of the uh, current period. And this ending balance is actually the cash which we have in the balance sheet of the current period. So as we discussed, the statement of cash flow must include the following three sections: uh, operating activities, investing activities, and financing activities. So now we are going to discuss it one by one. First of all, we have cash flows from operating activities. So these are the core activities that make up a company's daily business. These are related with the core business activities like selling the products or providing services. The cash flows from operating activities section tracks all cash that flows in and out of the business from the everyday operations. For examples, in case of inflows, sales from the customers, interest and dividends received. So sales from the customers is, you can say, it is the main source of the income from most of the business. However, interest and dividend received, these are, you can say, some extra cash from investments. For example, the company might earn interest on savings and receive dividends from shares they own in the other companies. Likewise, we have outflows from operating activities, like suppliers of merchandise and services. Companies need to buy inventories, supplies, and services to keep their business running. So this represents the outflow from the company. Employees means you can say salaries or cash paid to the employees is called salaries, which is also related with the operating activities. Lenders for interest. So if the company has borrowed money, it needs to pay interest on that. So this is the part of operating activities. Then governments for taxes. So taxes is also outflows from taxes are the part of operating activities. So next we have investing activities, and investing activities represents cash transactions that are related to the acquisition, that is purchase and sale of either long term assets or the long term investments. So these includes whether these activities shows whether the company is investing in its future growth, that is by buying any assets or not, or you can say generating cash by selling or collecting on the investments. So here you can see the inflows or outflows from investing activities. Number one is selling investments or plant assets. So in this way, the company get money in the business, or these are called inflows. Likewise, collecting on principal on loans. One thing must be remembered that this is just the principal amount that is included in investing activities, not the interest, because the interest goes under operating activities we have just discussed. And these are the outflows from investing activities: purchase of investment or plant assets, purchase of debt or equity investments, and if the company makes loans. So these are the part of investing activities, in which you can say a company is using its cash to grow or change its assets base, whether by acquiring new assets or making loans or selling off existing assets. Then in last we have financing activities, and financing activities track cash movements between a companies and its investors, or you can say creditors. This section shows how the business raises money to fund operation or growth, or return money in case of outflows to its financer or owners. So you can see that inflows from financing activities include short-term or long-term borrowings, and owners, for example, issuing shares or stock, whereas outflow includes make payments on borrowed funds, owners for dividends and purchase of treasury stock. So these all are the sources of outflows, and here inflows under financing activities. Or in short, in you can say in conclusion, you can say that financing activities reflect how a company is funded by debt or equity, and how it returns value to lenders or shareholders. So these are the three types of activities. Now we have the concept of cash. We use the word cash while preparing a cash flow statement. Here, cash includes both two things. One is currency, and this cash or currency, whether you have on hand or in the bank. And then we have cash equivalents. Cash equivalents include short term, highly liquid investment that is readily convertible into cash in 1 day or 2 day or any day. So, this is highly liquid. It is just like cash. So, near maturity, that market value is unaffected by interest rate changes. So cash equivalents are also the part of cash. So we have financial and managerial accounting by Meigs, and Meigs, which is also known as Williams Haka Bettner. And we in this lecture we will cover uh, Brief exercises 13.8, 13.10, and exercises 30, exercise 13.1. So we are going to solve exercises one by one. So this is brief exercise 13.10. Watson Incorporation had cash balance at the beginning. Beginning means the opening balance of the cash is given. During the year, cash flows from operating, investing, and financing activities are also given. So you can see that we have two type of cash flows are given. One is positive here. Operating activities, positive means from the operating activities, cash are increasing or cash are provided by operating activities. Whereas from investing and financing activities, you can see that in both cases, cash are negative or in minus. So you can say that the cash are used by both of the activities. So, or you can say we are going to deduct or subtract these cash from the cash flow statement. What is the requirement? Prepare a cash flow statement including a reconciliation of beginning and ending balances. So, here we are going to complete this exercise. We have the name of the company, Watson Incorporation, then cash flow statement, and then for the year, this is for complete year, so for the year ended, as time period is not mentioned, we have cash flows from all the three type of activities. So cash flows from, first of all, operating activities. Here we have cash flows from operating activities, which is $136,000. Then we have a cash used by these activities. So you can say cash flows used in, cash flows used in, we have investing activities, and here we have dollar 56,000. Then we have next one is cash flows used in, these are used in financing activities. So minus, this is $34,000. By adding all these three activities, we take the sum of all three activities. So here, this is 4,600 and $46,000, as this is the positive cash flows. So we mention net increase in cash during the year. So this is the net increase in cash during the year. And then we will add cash balance at the start of the year, or you can say cash balance at beginning of the year. So cash balance at the beginning of the year is also given, which is $89,000. So we add dollar 89,000. So when we add these two, we get the total, which is $135,000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. 000. cash balance at the end of the year. And here we are going to close it by double line. So this is the complete format of cash flow statement. We have three type of activities. We add all these activities to get net increase or decrease from all these activities, and then we add cash opening balance to get the closing balance. So that's it. This is our first exercise. The next exercise which we are going to do today is 13-8, which is also introductory format of cash flow statement. So here we can copy the format. Okay, so the Taylor Incorporation cash balance at December 31st, 2011 is given. Um, at the end of its financial year was 155. So here we have the name of the company, which is Taylor Irons Incorporation. And for the year ended, time is also given December 31st, 2011. So ending balance is given, which is dollar 155,000. During 2011, cash provided by operation was 145. Provided means cash inflows from operating activities, which is 145. And then cash used in investing activities, which is 67. As it is used by the activity, so it is minus $67,000. And then cash provided by the financing activities. So provided means here cash flows from financing activities. So it is inflow, which is actually $10,000, and it is given in the problem. So when we add all these three, we get cash increase or decrease during the year, which is 88,000. Generally, we add net increase or decrease cash during the year in the beginning balance to get the closing balance. Now, we have net increase and decrease and the closing balance. So, opening balance is not given. Calculate the amount of beginning cash balance on January 1st. So, what we do, we simply take the difference of the net increase in cash and the ending balance. So here we have 155, we deduct $88,000. So here we have 67,000. It is the beginning balance of the cash. So this is the answer. One more activity or exercise is 13.1. You can say the company's statement of cash flows for the current year is summarized as follows. Cash provided by operating activities, $200,000. Cash used in investing activities, which is minus $120,000, as it is used in the investing activities. So that's why it is minus. And then cash provided by financing activities, which is $88,000. So when we add all these three, we get cash increase during the year, and then we add beginning balance to get the closing balance. So here cash flow statement is given. Number one requirement is briefly explain what is included in the each of the first three categories, that is cash listed cash the cash from operating, financing, and investing activities categories. So, the first requirement is just explanation that what are going to be included in these activities. So, uh, this cash flows, the cash provided by operating activities. So, this is the part of operating activities. We add it, or as this is cash provided, so this is the positive balance, or you can say net increase from operating activities. Then we add cash used in the investing activities. So cash used in the investing activities is negative, which means that this activity or investing activities use the cash, or this cash flow is negative. Then we have cash flows provided by financing activities, which means that the company got cash $88,000 from the financing activities. So, this is the first, you can say, explanation that what is included in each of these first categories. So, you can see that. If we explain it further, then the operating activities section generally includes cash from and use for those transactions that are including in the determination of profit, or you can say that these are this is the cash from the core business activities. Then the second one is cash used in investing activities. This may include cash from and use for the purchase and disposal of assets that are not held for resale purpose, primarily investments and property, plant, and equipment, or even the intangible assets. The third one is this $88,000, which is cash provided from financing activities. So you can say that this may include cash from and use for the debt or equity financing transactions. So the other requirement is, on the basis of the limited information provided above, describe the company's change in cash position during the year and your interpretation of the strength of the company's current position. So you can see that from the beginning cash flows, or the beginning cash flow was $75,000, means this cash was available at the start of the period, which is $75,000, and after 1 year this cash is increased from 75,000 to $243,000. So you can say that there is a significantly increased in cash during the year from 75,000 to $243,000. So there may be several reasons. You can see the operations were strong, providing 200,000 of positive cash flows. Based on the limited information provided, you can say that the use of 120,000 for the investing activities is difficult. But one possible reason may be that the company is preparing for future by acquiring additional assets for like property, plant, and equipment, or other any other investments. So the reason may be this, that company is investing in additional assets. That's why it is negative cash flows. And this $88,000 increase, so this indicates that the company is expanding its financing in some ways. There may be two strong reasons. One is the selling of bonds or other debt securities, and the other situation may be the company is issuing ordinary or preference shares or treasury shares and so on. So, with the help of this limited information provided in the question, we can say that the overall cash picture is highly good, but it is somewhat speculative or doubtful. It is clear that the company has a much larger cash balance at the end of the year as compared to the beginning balance, which is 75,000, but that increase is tied directly to its success in generating cash flows from its ongoing normal operations. So, so that's it from this problem. The just explanation or interpretation is required. The information provided in the question is very limited. So, based on the limited information, we have explained few possibilities of this increase or decrease in the cash from different activities during the year. So that's it from this lecture, and we are going to start direct methods for cash flows from operating activities in the next lecture. So take care, class.